Reverse mortgage. How many of senior citizens have even heard of this term? I'm sure many of them have not. But they should all know about this financial scheme that could prove to be their lifeline in times of financial crisis. Banks try to hard sell a number of misleading products but never promote this scheme. That is the reason why reverse mortgage, a lifesaver for senior citizens in times of financial crisis, could not take off in India. In his twilight years of life, a gentleman, a retired professional from the private sector, has a survival dilemma. He has exhausted all his financial resources to get his only son a professional degree in Germany. Now that the son has settled over there with no hope of coming back, this senior citizen is only left with a house that costs 2 crore rupees and no liquid in hand for survival. This senior citizen is not alone to have this kind of dilemma. Across the country, there are senior citizens with no pension in the old age who had spent beyond their means for their children's education and marriage. In the end, they are left in the empty nest and no further cash in hand. Most of them repent, having built a bigger house in anticipation that their children would stay with them in the old age. This is not an unfortunate situation for just a few senior citizens. In the absence of pension and any other social security, many senior citizens across the country today are left alone in their own house but having no money for a decent living. Is there a way out? Of course. The law of the land has a provision called reverse mortgage scheme. Introduced in 2007, the scheme provides a source of income for cash-strapped senior citizens of India who have a house of their own. As a matter of fact, theoretically speaking, this product is beneficial for senior citizens who do not have adequate income to support themselves. What exactly is reverse mortgage scheme? A reverse mortgage scheme is exactly the reverse of a standard mortgage that is used to buy a house on loan. In this scheme, the senior citizens are required to keep their house on a mortgage with the bank. The bank determines the value of the given home and then agrees to give a reverse mortgage loan. It is usually up to 60 to 80% of the appraised value, depending upon the bank's policy as well as the given property's resale value. As per the scheme, instead of giving the full loan amount in lump sum, the bank gives the borrower the amount in monthly installments. The bank makes payments to the borrower against the mortgage of his residential property. The borrower is not expected to service the loan during his lifetime. After the death of the senior citizen, his legal heirs have the option of buying back the property at the bank determined value, or else bank takes possession and sells the property in auction. However, there are many downsides of the scheme. The reason why it is not as popular in India as the scheme had been envisioned. It's not only the psychological barrier of the reverse mortgage where the borrower is losing control of his home and using it as equity while one is still alive. In the Indian cultural context, it is given that after your death, your heirs will receive the inheritance in full and not less of an inheritance while paying back to the bank. Another potential downside is what if one outlives the stipulated period of reverse mortgage payout. Furthermore, a reverse mortgage loans are often exorbitantly expensive, requiring additional premiums and fees. Take the case of a retired chartered accountant with a corporate house. Currently, the apartment in which he is living is worth 1 crore rupees. He plans to take up the reverse mortgage for the flat and expects a minimum 50,000 rupees per month from the bank. His dilemma is not limited to the fact that he is not getting authentic information about this scheme. Of course, lack of information is due to the fact that there are not many who have availed this benefits of this scheme. This person knows only one person who has so far availed this, but according to him, the bank has made it clear that the property needs to be not more than 20 years old. But how is that possible? Usually, a person buys his flat in his mid 30s. That is the time when he is able to save enough for down payment and have enough take home salary to get the EMI approved by the bank. So, by the time he is 60, the property will be more than 20 years old. I spoke to a banker who justifies that banks' reluctance to discourage the senior citizens' quest for reverse mortgage. According to him, it's a mortgage like any other mortgage where the bank has to ensure the return with the collateral in place. According to him, most of the demands for reverse mortgage comes where the house is really either dilapidated or in a really bad condition. So he says that the bank cannot approve a mortgage on the notional value of the property. Reverse mortgage is more often than not a high risk lending, and hence the banks have not promoted it like any other form of lending. The larger issue is whether a bank can deny a senior citizen his right to reverse mortgage. I spoke to a legal expert on the subject who feels this is a grey zone, and the scheme has been floated more like a social welfare lending than the priority lending. Since it's a high risk mortgage, the banks have not been very aggressive in promoting this scheme. Lawyers maintain that this is eventually a loan and hence the bank reserves the right to deny subject to their evaluation criteria. The bank has a right to get the valuation of the collateral and then approve or reject the mortgage. It's a high risk lending for the bank and comes at a very high rate of interest for the senior citizens. Thus, it fails on both sides. There could be many situations where the security could be imperfect, and then how can bank lend? In a nutshell, the social welfare ethos with reverse mortgage for senior citizens could not gain ground in India because banks did not promote it to gain popularity. Then the Indians have a mindset that they should pass on the assets to their children without any loan against it. The children are also not interested on the prevailing liability that lies on them, and hence they discourage the parents. Then reverse mortgage is a lengthy documentation procedure where banks require various documents of the property. For a senior citizen, this procedure could be tedious, complicated, and difficult to understand. The monthly payouts are fixed, and there is no provision to increase this amount in case of an emergency or contingency. What could make reverse mortgage a prevailing trend in India? Firstly, the banks have to come out with lot of promotion to see that the senior citizen borrowers take advantage of this scheme. This could be done only when the government decreases the interest of reverse mortgage loan for the senior citizens. Will the government make reverse mortgage lucrative for both the banks and senior citizens so that senior citizens with no source of income and no social security but a house of their own can lead a dignified life in their old age? Well, my guess is as good as yours. Thanks for watching.